Mr. Ambareesh Baliga, an independent market expert. Mr. Baliga, good morning. Thank you so much for taking the time and joining us here on Morning Brief at night. Help us understand, sir, the impact of US-China reaching a trade deal has not really reached Indian markets. What seems to be holding us back?
Good morning. In fact, US-China reaching a trade deal, I think, is positive for global markets. And
Yeah.
to a certain extent, I think it is also positive for the Indian markets. Because if the China trade deal had not happened, there was always a fear of dumping of goods across the globe, other than US. And that would have spoiled the market for India. So I think to a certain extent, that's positive.
All right. And I want to specifically talk about yesterday's rally, Mr. Baliga. And yesterday we saw some sort of a historic rally which we hadn't seen since, 2021 or so. Sensex up almost
Absolutely.
3,000 points, Nifty 50 up more than 900 points. Was it the perfect day to book profits and have those who have not done it lost the bus?
No, in fact, if you remember, I've been cautious for quite a while. But in the last 2 months, I mean, we got more or less fully invested because we saw the valuations at decent levels. And
Right.
now I can confidently say that possibly we have seen that bottom at 21,800, 22,000 levels. But what happened yesterday, I think, was a bit of an overreaction to the ceasefire. I mean, we had seen the markets correct about 400 points post announcement of Operation Sindoor. So a rally of 400, 500 points was something which was actually expected yesterday. But then a 900 plus sort of a rally was completely unexpected. So I think it was, like I said, it's a bit of an overreaction. So it's very much possible that we could see some correction. But like I said earlier, that I think, I mean, that correction phase is over. What we should see going ahead is small corrections, consolidation, and then possibly a move up. Because if you look at the macro scenario, I think more or less most of the dark clouds are out. I think the last one was this war, which, I mean, hopefully now there should not be any further violations by Pakistan. And I think that should be positive for our markets going ahead. Because, I mean, like you look at the various things which are there, right from the earnings. I mean, we have seen the Q4 earnings. Fortunately, the earnings were recalibrated by the analysts earlier, so the expectations were low. Compared to that, we have seen better earnings. We have seen better macro numbers coming from the economy. Then we have had the US UK trade agreement. We had the India UK trade agreement. Hopefully, we should have the US India trade agreement soon.
Right.
Monsoons again are expected to be better than normal, so that's another positive. So if you look at the various data points, there is nothing really negative.
All
So
right.
from here on, I don't expect a major correction, and any corrections should be utilized to buy and build the portfolio for a longer term bull market.
All right. Well, this may be an opportunity to buy and no further likely corrections. I want to bring the context of US markets yesterday. And usually, Mr. Baliga, we've seen, like you mentioned, US and China working together, maybe not great news for India, but the fact is that usually the ripple effect and the knock-on effect on Indian IT sector every time US markets go up is fairly comparable. And this time around, we are seeing some sort of a reverse and an inverse relationship where look at the NASDAQ, and this is what we have on the screen right now. Stocks of Microsoft up 2.5%, Apple and Nvidia up more than 5%. Yet we have a scenario where Indian IT sector has been bleeding this morning. So what seems to be this divergence today? I understand overall for the Indian markets, US and China working together, not the best of scenario that India would have wanted until India strikes a deal with the US. But the fact is that there has to be some ripple effect which we see missing today in India's IT stocks, sir.
No, I mean, IT stocks had moved up yesterday. When we had that 900 plus point rally, we had the IT stocks moving up.
Right.
I mean, moving up again today based on Nasdaq would have been a bit too much. So I think there is some correction happening because of the sort of move which we saw yesterday. At the same time, the sort of fear which was there earlier for the IT stocks, especially looking at the possible recession or a slowdown in US, I think that is slowly going away. So one need not be negative on the IT stocks, but even at this point of time, I would be slightly cautious. I'll not really go out and start buying IT. I would possibly wait for some correction. But again, like I said, I mean, just like the overall market, I'm not negative on IT. I would be a bit cautious.
All right, not negative on IT, albeit a little bit cautious. Well, I also want to draw your attention, Mr. Baliga, to something important that came in yesterday, because India yesterday proposed to impose retaliatory duties under the WTO norms against the US over aluminium, steel and aluminium tariffs that US has imposed. And India has said that this is in the name of safeguard measures. Now, safeguard measures are likely to impact as much as $7.6 billion worth of India's exports to the US and the relevant products originating from India, on which the total duty that would be collected by the US would be close to $2 billion. Now, accordingly, India has proposed that it would suspend the concessions that it is offering the US, and an equivalent amount of duty would be collected on products that originate from America. So, help us understand, sir, what does this mean for India's steel and aluminium sector, metal stocks per se, and parallelly, does it make sense for India to actually have these retaliatory tariffs simply because India hardly imports any steel and aluminium from the US?
No, that's true. But then, see, overall, because of this, I mean, it can have a negative impact on the ongoing trade treaty which is being talked about.
Okay.
That can get a bit delayed. I think, I mean, the reaction to this could be a bit of a delay in the trade treaty which we've been talking about. Like you rightly said, we should have been among the first to get it signed. But then, I mean, already UK and China are more or less, I mean, ahead of us, so there can be further delay.
All right. Also talk to us, Mr. Baliga, how important are the trade negotiations which are on in New Delhi right now until May 16th, in which India and EU negotiators are talking to each other? We have stitched a deal with Switzerland, for example, which is an FTA relevant, until 2035. But India is also very keen to stitch up, in addition to the India-UK FTA, India is very keen to stitch up India-EU FTA as well. So, how important is trade with the EU bloc, and specifically in the context of markets? How do markets view India and EU coming closer together, if at all those negotiations go through well?
No, I think it's an era where possibly we should have trade agreements with most of our, I mean, buying countries, I mean, where we are exporting. EU clearly is one of the major ones where we have exports going on. So I think from that point of view, it is extremely important. But I think most important would be the US-India treaty, which hopefully, like I said, should happen sooner than later. But because of these developments, yes, I mean, there can be a bit of a delay.
And what do you make of the fact that after US and China have both respectively announced that they are working closer together, why do you think there is pressure on the Hang Seng index? Why is the Hang Seng down 1.6%, 1.7% in early trade today? Because US, on the other hand, reacted very positively. Well, of course, we saw
Right.
Shanghai Composite as well as Hang Seng register some gains yesterday. But why such a large correction in Hang Seng, with all other Asian stocks seem to be, and Asian indices seem to be in the green this morning, sir?
I think, I mean, like it was clearly expected that post the announcement by Trump, I mean, we should have had the treaty out as of yesterday. But then even that has got a bit delayed. Maybe it can take another 2 or 3 days more. But looking at that, possibly we have seen that correction in Hang Seng.
All right. And also important inflation data in India domestically likely to come out this week. So inflation expected to be in line, which means the RBI will continue to cut interest rates. So have markets already factored that in? How many more rate cuts is market factoring in, given that US may still be quite some distance away for the US Fed to cut rates?
See, from an inflation perspective, in India inflation should be benign. So, I mean, I really don't expect it to be more than what RBI has been talking about. And based on that, clearly we are expecting at least another 50 to 75 basis points cut over the next, I mean, 1 year, which is I'm talking of financial year FY26. We should see at least another 2 or 3 rate cuts, like between 50 to 75 basis points.
All right, at least another 2 rate cuts. Well, meanwhile, Indian markets are deepening their cuts this morning. Nifty 50 Sensex both down sharply in trade today. Nifty 50 is down about 0.8%, now well below the 24,800 level. Sensex, meanwhile, is down about almost 500 points from yesterday, maybe more. In fact, 81,538, more than a percentage correction in the Sensex. Volatility, meanwhile, has gone up a little. The fear index is up at about 18.46. Mr. Baliga, do you expect the day ahead to be choppy? Because this seems like there are major cuts coming in. At least that's what early signs suggest right now. Could this be, again, like you mentioned, there won't be massive corrections going forward, but are these corrections a good opportunity for investors to dig their teeth into?
Absolutely. Like I said, yesterday was a bit overdone. So a correction today would be, I mean, I would say that would be normal. And I'll not be surprised, even if it's a 200, 300 point correction today. And in case it deepens a bit, maybe if we see levels of closer to about 24,400, 500 over the next couple of days, I think that could be I mean, a buying opportunity. Because I really don't see the markets going too much below 23,800, 24,000 levels unless something really goes wrong again.
Okay.
So any sort of a correction should be a buying opportunity for long-term investors.
All right, any correction should be a long-term buying opportunity. Now, I want to specifically understand from you, Mr. Baliga, before I let you go, what seems to be driving this correction? Is this profit taking on account of the massive rally we saw yesterday? Or could this proportionately also mean that foreign investors are now looking at China and parking their money there rather than coming to India? Is this a retail investor-driven decline or correction that we are seeing today, or are there foreign investment factors at play here?
No, because if you see, FIs had turned buyers since the last fortnight or so. I don't think that's going to change so much overnight just because of the sort of a trade agreement which is happening with China. Because end of the day, they also look for opportunities, and the sort of opportunities which are there in India are more or less long term. So I think the FI buying will continue, no doubt. And today's correction, like I said, I think it's more of a normal sort of a correction because of the sort of a overdone rally which we saw yesterday. So it's normal profit booking because you have so many traders who would have bought in the last couple of days. I think it's a great opportunity for them to book out. Big traders, they are short term. So I think it's a great opportunity for them to book out. So that's exactly what's happening today.
Well, thank you so much, Mr. Ambareesh Baliga, independent market expert, for sharing your expert opinion here with us on News9. Pleasure having you with us this Tuesday morning.